Nishchal Maheshwari is with us, and SP Tulsian of sptulsian.com also now joins us. Mr. Tulsian, good morning. Thoughts first on Reliance Infra, and perhaps on expected lines, those results, but any point of taking a contra buy call or just completely avoid it?
Anuj, I don't think that they are on the expected line, because the exceptional write-off of 12,000 crore, which we have seen, of that 6,000 crore have been charged to General Reserve and 6,000 to P&L, doesn't make any difference even if you have charged to the General Reserve, because eventually that debit balance of the P&L will go to General Reserve or reserves and surplus only. So yes, that's a cause of concern. And what I have noticed that the two results which have been declared by the ADAG group, the assets have been written off. Maybe you can give any notes. The notes have been given for this write-off. But in Reliance Naval also, you don't see the intangible assets having written off. Here you have seen in case of Reliance Infra as well as in Reliance Naval that the tangible assets have been written off. Similar has been seen happening in case of Reliance Naval also, where the tangible assets of 10,000 crore have been written off. So that whenever you see these kind of treatments coming in, the question comes whether all the assets which are carried in the balance sheet are having its true value. And if you can write off your fixed assets, then obviously the current assets are seen more vulnerable. And yes, the things are seen to be quite bad and quite precarious. And now we are only wait to see the two results, Reliance Capital and Reliance Home Finance, which are due on 28th June. So yes, all the results are out, and practically in every results you have seen the exceptional having provided for in either in Q4 and or in FY19, on an aggregate basis. So yes, they are a cause of concern.
Okay, Mr. Tulsian, good morning. Now almost all of the large cap auto names, at least majority of them, are sitting in a bear market. So M&M, for example, is now down in excess of 20% for the year. So among three of these names, M&M at 630 around, Maruti at around 6,700 and Eicher at sub 20,000. Which one looks the most attractive from a long-term point of view?
See, Sonia, naturally you cannot afford to have no auto stocks in your portfolio. You must have some auto stock. And I think that probably this is the right time to buy with a longer term horizon, maybe with a view of about at least 6 to 12 months. Though we are expecting that probably the downturn in the cycle should come to an end with the end of the June monthly sales numbers. But since if I need to pick and choose any one out of three which you have said, probably I'll go with Maruti, because if you really see the situation in case of Maruti, the things are not as bad. In fact, they have the market share of the more passenger vehicle to the extent of 50%, plus they have been seen very innovative. They will keep introducing the new technology and new models, at a regular pace. But one should not, forget the M&M also, because M&M, if you really see that this is what I have been saying, that M&M and Escorts both will be having a better monthly sales numbers. M&M having reported the monthly tractor sales of about 25,000 tractors for the month of May. Probably for June they'll post the monthly sales of anywhere between 35 to 38,000 tractors, which will be seen quite positive, by the market. Similar may be the case with Escort. So probably I'll go in a minor way with other auto stocks also. But Eicher may not be in my buying list because of the fall in the Royal Enfield sales to as low as now, or maybe sub 65,000 vehicles per month. But yes, Maruti can definitely be looked into for adding at the current level. But if you want to broaden your automobile portfolio, then look for Mahindra & Mahindra and Escorts also at the current level.
Okay. Mr. Tulsian, just on a side note, the MindTree open offer is going to, kickstart today, with L&T looking to, I think, buy shares at about 980. How do you expect this to play out? Because this is a very event-driven time for the stock at the moment. What would your recommendation be here?
See, we have been saying this, that you exit from the stock at 980, whether in the secondary market or in the open offer. Because I think that, after this, whenever the new management comes in, you see some kind of cleaning the books, or maybe, tapering the growth as well. And my MindTree is not seen to be ruling at a cheap valuation. In fact, people are expecting that probably the same kind of P multiple as enjoyed by L&T, Infotech and L&T Technology Services will get applied to MindTree, which may not happen in the next 6 months or so. And definitely this is seen to be an expensive stock. And the rift, or maybe the integration, I would say that integration pain, whether at the organization level or at the client's level, may be seen for the next maybe couple of quarters as well. So taking all this into consideration, I think the frenzy or maybe the positive bias which is seen having built on the share price with the L&T scene coming in should be capitalized or should be utilized by the existing investor by exiting from the stock.
Okay, we will get you more details on that MindTree L&T open offer that begins today. But Nishchal, before we let you go, I wanted your thoughts on Godrej Consumers, if you track that. Because, you know, there was a management meeting with analysts, and for the first time in a while, we've seen some positive statements come through. So they've spoken about how domestic volumes could grow faster compared to Q4, and they are expecting a recovery in demand. Is this a stock you like, or if not, anything else in the FMCG space?
So, Sonia, we do not cover Godrej Industries at the moment, but what I think the management has been putting out has been our view, and we continue to believe that FMCG is going to surprise the market with volume growth. And we had put out a report recently, and we believe it will be driven by the rural side, and given that we are seeing some better monsoon now. So I think the volume should be picking up, and that's what I think the management is also trying to ascribe. So I'm totally with that basically, and our top picks out there are Britannia, and Britannia is our top pick in that space.
All right, Nishchal, we'll leave it there today. Thanks a lot for joining us. For now, let's look at some stocks where we're seeing first rates in pre-open. Indiabulls Housing is starting higher. That rate, of course, should correct. Yes Bank is up a bit, about 2%, and ITC is a bit higher. On the way down, this, I think, some bit of. Let's wait for these volumes to pick up. There's absolutely nothing in some of these stocks. In terms of broader market, there's a bit of a gain in DHFL. Reliance Infra is starting 10% lower in pre-opening. Let's see if that's how it opens. Also, Reliance Capital 10%. Gen Irrigation, Rima was talking about that pledge issue, so 5% down on that stock. But I think we'll wait for the volumes to pick up. Rupee also is actually absolutely flat right now.
Oh, absolutely quiet on the rupee. Not much happening. A couple of more stocks. Jet Airways has been hitting record lows day after day. So this morning is no different. Jet Airways down almost about 10% odd. On Rel Infra, remember there are those auditor concerns as well, where the auditor has, spoken about material uncertainty. That may cast a doubt on the company's ability to continue as a going concern. So Rel Infra is in some serious trouble, it seems. Reliance Capital as well is down almost about 10% odd or so. And a couple of more stocks, that you perhaps want to look at on the upside. Adani Power has been gaining some ground for a bit. BHEL has won some orders, so 2.5% higher there. And a couple of these steel stocks are making a bit of a comeback. So GSW Steel, etc., is up almost about 1% odd. But it seems like the market opening could be on the upside. If you look at the adjusted rate now, it looks like the Sensex, I guess, is a more believable rate.
Yeah, the Nifty is
like
still,
it could start in the green.
It's still looking quite skewed right now. I mean, 58 points seems. Let's see how that really plays out. In terms of just some stocks in news today, where there's positive sentiment, Laurus Labs, because they had a US FDA inspection, no observations, nothing critical at least. So that's a stock that's also holding out in positive territory. But ADAG is the one that is under pressure. OBC and a couple of other PSU banks are slightly positive. Actually, let's see some more PSU banks, because now the buzz about the next recapitalization amount, that has started doing the rounds. There are reports floating around about the government doing its math. So some of the PSU banks, at least, are starting out on a positive note. But yeah, I mean, there's still a divergence between the Nifty and the Sensex in the pre-open. Anuj.
Yeah, I think this pre-opening is reminding me of Sarfaraz yawn yesterday.
Are you going to recreate that?
No, absolutely not. Especially on the dollar rupee, it's absolutely nothing moving. But we'll find out. Of course, on the Nifty, the rate that you are seeing is courtesy, Yes Bank and Axis Bank. Both these stocks looking up. Yes Bank could actually be quite interesting, because that's fallen to multi-year lows. Mr. Tulsian, thoughts on Yes Bank? We've discussed in the past, but what do you think is now bothering the stock so much? It just keeps making fresh lows.
See, Anuj, I think you have no remedy for the fear, in spite of the Mr. Gill, the MD and CEO of the bank, having assured the investors, which in fact have been seen quite assuring. I think this is the time to look to the stock again at the current level, and but only caveat that you need to have a time horizon of 1 year. You just cannot keep on expecting the things to improve in this next 1 quarter or maybe couple of quarters. Even if you have seen any kind of fear seen coming in on the fresh slippages or fresh asset quality, then still you have the cushion or maybe the positives of the ILFS recovery once, I'm quite hopeful that probably after the budget government will focus on that as well, and maybe some kind of recovery from the step down subsidiaries will start flowing into all these lenders of ILFS, which will be seen positive. So yes, things are seen to be good for making investments in the Yes Bank at the current level, but with a time horizon of minimum 6 months to 12 months.
Okay, well, the other stock on our radar is Jain Irrigation. It's now down about 5%. And remember, there's been once again a creation of pledges of 35 lakh shares. With this, over 50% of the promoter shares are pledged. So that is the big concern. But we'll talk about that. In the meantime, my colleague Rima is waiting by. She'll tell us about the L&T open offer for MindTree that opens today. Rima, over to you.
Thanks so much for that. Yes, L&T's open offer for MindTree starts today. Details of this open offer: L&T's made an offer for a 31% stake at a price of 980 rupees per share. It starts today. It closes on the 28th of June. Now the stock has been hovering around the 970 levels, plus or minus 10 rupees for the last many weeks now. And 970 is where it closed even in last week's trade. Now L&T will be making a total payout of about 5,000 crore rupees for their 31% stake. Remember, just to give you a brief timeline, they had acquired their 20% stake from VG Siddhartha. Thereafter, L&T kept buying shares of MindTree in the open offer, and as of 13th of June, which is the last available information, L&T's stake in MindTree stood at 28.9%. Now, this will be a 31% open offer, and the total stake that L&T wants to have in MindTree stands at 66%. Last week, we were awaiting what MindTree has to say in response to the L&T open offer. Remember, they had constituted that independent directors committee. Last week, we got the intimation that IDC believes the open offer price of 980 rupees by L&T for MindTree is fair as well as reasonable. So this was a big corporate battle which was brewing for the last many months now, and now finally L&T's open offer for MindTree starts today.
Okay, Rima, thanks a lot for that. Well, just looking at some more rates now, because this is quite interesting actually. The pre-opening, the divergence between the Sensex and Nifty still stands. And the reason is Yes Bank, that's up about 2.5%. Power Grid is the other stock, that's up about 1% in pre-open. And Z Entertainment as well, that's up about 0.8% as well. Mr. Tulsian, on Z, what's the thought process now?
Anuj, I think now we have to only wait for the stake sale to happen. Probably the timeline given by the management is end of June or maybe the first week of July. So I think that till then, if you keep seeing this selling by the lenders, which is not which where management has no control, then you will keep seeing this kind of volatility. But otherwise, purely from the stake sale news and fundamentals, looking to the company's fundamentals, I think share is seen to have much more than corrected, and maybe at least 350 should have been held and respected during this interim period as well. So keeping positive view and wait all eyes to see this stake sale news, which is expected to be out end of June or first week of July.
Okay, it has tested investors' patience a lot. This stake sale, it just hasn't been coming for a while. But let's see whether anything reaches fruition over the next few months. But let's take a bit of a breather from equities. For now, the market is absolutely quiet, not indicating any movement either way. But one commodity that's indicating an upward trend has been Brent. It's been rising on tensions after those Middle East tankers attack took place. 62 plus now. Manisha Gupta is here to give us a roundup of all the action there. Hi, Manisha. Good morning.
Morning, Sonia. Thank you for that. Well, yes, much of last week, the last 4 or 5 sessions for that matter, have been about Iran tensions, a couple of tankers attacked at Strait of Hormuz, and then, of course, subsequent statements from US saying that they will do what it takes to ensure that there is safety in crude passage from Strait of Hormuz. So that is an ongoing development, of course. But on the other side, even at $62 per barrel, the Brent is 17% off from its 2019 highs. Even at 52 plus, the US crude is still 20% down from 2019 highs. So we are not really out of the woods yet, and there are demand concerns as per reports from EIA and the International Energy Agency as well. The US inventories at July 2017 highs would continue to weigh on prices also. The other thing is the OPEC meeting now slated perhaps for 3rd and 4th of July with Russia. That is the most important event to focus on. The statements, while of course there is an expectation of a unanimous decision to continue to cut output for the rest of 2019 also, but the statement, the meeting itself is what will give you further direction for the crude oil prices. A quick word on the metal space, where we have seen the steel production gain up by 10% in China in this year. The latest data came in early today, and we have seen the steel prices in China decline by 2% because of that. The other metals also have been under pressure. If you look at copper, that is trading at 2019 lows. The inventories have been rising. Demand is a concern, not just in Europe, but in China, especially with the weak economic data that we have been dealing with in the previous week. And that continues to weigh on the metal space today in Asia as well. So whether it's iron ore, steel, copper, nickel, all of that has started yet another day with weakness.